In today's video, we will be going over on how to analyze a chart. So you know, if you see something like this, how you can interpret it and analyze it and use it for your advantage. And for that, we will be using Elliot Wave Method. And this is something actually that we have been using on our channels and in our videos, if you've been watching that, and which we will continue to use. And basically, the assumption is that the markets move in certain waves. Upwards waves and retracing waves. And these waves are not the same always, but they are similar and they have a certain structure which allows us to use certain rules so we know how things are actually working. So now let me take this off the chart and let me take all of this on the chart and let me show you how this would work. So there are impulsive waves. So a wave 1 is an impulsive wave. And then there is corrective waves, which are coming after an impulsive wave, a wave 2. And then there is a wave 3, an impulsive wave, a wave 4, a corrective wave, and again a wave 5, which is an impulsive wave. So now we have this 5-wave move completed to the upside. What is going to happen after this? Well, we will see an impulsive or a corrective wave to the downside, a wave to the upside, and again a corrective wave to the downside. And what would happen after this, let me just quickly show you, is something like 1, 2, 3, 4, 5, and then again an ABC. But this, hypothetically, this 1, 2, 3, 4, 5 would make a new high. And of course, this is not financial advice. This is just our opinion. Please do your own research and you're responsible for your own trades. Now, how can we use these information for our advantage is the first thing you might ask. Well, if we know that this is a wave 1 and if we know that this is a wave 2, then we can buy here and the risk is very low because, well, the worst thing that is going to happen is that we drop a couple percentage, but there is so much room to the upside to grow because wave 3, 4, 5 haven't happened yet. However, if we are at a different point, and let's say we are at the wave 4, somewhere around here, then you know, well, the only room that is left to grow is basically this. And this might mean higher risk because basically the setup could go here and then break down and then you're in the correction. So the margins are really low. But in a wave 2 bottom, the margins are still very high. So this is how we can gauge how risky a setup might be. Of course, the big problem always is you don't know that this is a wave 2 because you haven't seen this part of the chart yet. And that's why it's important to have certain amount of confirmations. Now, this is something you need to define for yourself. Some people say if they see a wave, a 5-wave move to the upside, because something you have to know, all of these impulsive waves are also internally a 1, 2, 3, 4, 5, and all of these corrective waves are also on a smaller count, a 1, 2, 3 ABC correction. So some people say if they see a 1, 2, 3, 4, 5 pattern forming here and a corrective ABC here, they assume a wave 2 is in and that's their confirmation to buy. And now it will rally in a third wave. That is what some people do. You can also do it different. You can also say 1, 2, you wait for the 3, you buy at the bottom of the 4 and just ride the 5th wave. Or you wait for a wave A down after a 5-wave move and then you go long maybe at this bottom and you take this B wave up. So there's many different options you can choose, and how you do this is absolutely your own choice and just has something to do with how you prefer to trade and also what you do trade. It's just something that gives us a good amount of structure. And if you want even more structure, then we offer on our website a psychology-based trading course. We offer daily analysis. We offer trading signals on trades that we take ourselves. We write articles about things in the trading and crypto space. We offer a trading strategy and even more things. That is the first link in the description if you're interested. But I think with that, I have explained this setup to you. If you have any questions, feel free to drop them in the comments down below. And now you know how this Elliot wave works. And this is only one. There is so many systems you can use to analyze trades. This is only one of them. There are probably thousands. And the key is to find one which works for you, especially. And this is just something to do with who you are as a person and how you like to do things. If you're a high risk person, if you're a low risk person, exactly how you trade. Trading is such an individual sport that it is hard to give a generalistic advice. But yeah, this is the Elliot Wave theory as explained by us and is also as used by us in our videos and our analysis. We also use different things in our analysis, but this is definitely one part of it. I hope you enjoyed this video, and I will see you in the next one. Bye bye.